Well, Donald Trump says he will be pausing his proposed 25% tariff on Canadian goods for a month. That tariff, if implemented, is expected to have some pretty wide-reaching impacts in almost every aspect of the Canadian economy. Here to discuss is Peter Sashecki from Everything Financial. Good morning, Peter. Good to see you. Are you getting a lot of questions from your clients about the uncertainty here?
Don't know what you're talking about. Yeah. The odd one, people, trying to prevent people from jumping off a cliff and
making rash
losing their mind and making, emotional, uneducated, unfortunately, uninformed decisions or decisions out of fear.
Yeah.
Is what this does, and I won't say it's the media's fault out loud.
But there is
uncertainty, and people tend to make emotional decisions, and we've said this for 5 years, you and I have been doing this. If you make emotional decisions about money, you're always going to make the wrong decision.
Yeah. Okay, so let's talk about, just last week, the Bank of Canada reduced its key interest rate by 25 basis points. With these looming threats, if they come into effect even 30 days from now, could we see an unplanned interest rate announcement for the Bank of Canada?
Yes. Some major banks are calling for a 1.5%, but more likely, it's been floated out there that you'll see probably a 0.5% reduction in between the next scheduled one.
Which is March, I believe. Is that right?
Yeah, it was 6 weeks from the last one, early March. So 0.5% might be a possibility, but that's still, that reduction of 0.5% could officially put us into the recession mode. But, and people hear the word recession, and again, Carrie, they make the emotional decisions and they start to lose common sense. But recession does breed opportunity, and recession does generally bring lower interest rates. And really, our economy is basically in a recession right now with our lack of gross domestic product output for the past many quarters. So it's not something to be scared of. It's just something that might cause a reset on the economy.
Okay, some things you got to plan for here. And of course, mortgage rates would potentially be impacted by lower interest rates. What would it mean for someone who has a variable mortgage rates? Because things are always fluctuating there, right?
They are. And the variable rates when they start to do these mortgage reductions come down pretty quick, and you see lots of savings on your variable, your home equity line of credit. The locked-in rates are slower right now because a lot of those locked-in rate discounts have been priced into what's going on.
I mean the fixed mortgage.
Yeah, the fixed. And the other thing is with fixed mortgage rates right now is bond yields are just starting to move. Bond yields have to come down for the fixed rates to come down. And so they are coming down, but there was a pretty irresponsible story last week after the rates came down, right after I did the show with you, where one of the banks saying, oh, rates are going to go sky high. This is going to cause increased rates. You should lock in now. People don't lock into anything right now. If you're in a variable, you could win, and maybe that gives you 6 months, a year of more low rates before the fixed rates catch up. So,
well, if you were in a variable rate and you were probably riding at the top of the interest rates for a while there, so these lower ones would be welcome.
Makes up for it, yeah.
For those in a fixed mortgage situation, would they potentially renegotiate their mortgage? Is that something that they may want to consider?
You've got the fees, but remember we have 1.3 million Canadians, roughly 1.2, 1.3, with mortgages renewing in 2025. You might want to jump on the variable bandwagon for a year or so and see, because sometimes some of the variables to get out of them, the penalties aren't that bad, like 3-month interest penalties, or maybe you go with the home equity line of credit rate and you just ride it down a little more until you get to a comfortable position that fixed makes sense for you and allows you to sleep at night.
Okay, we only have 30 seconds, Peter. What about stock markets, investments? How should people respond there? Or what do we expect to happen to those things?
Quick knee-jerk drop like we saw the other day. The tariffs were put to the side. The stock market rebounded, had a good day yesterday. Don't watch the stock market. Mr. Trump, the president, loves the stock market, loves to ride it. He will not do anything that will cause the stock market to go crazy. He will want to back off. So stay status quo. Don't do any emotional decision on your retirement that might be 10 or 15 years away.
Okay. Peter Sashecki with Everything Financial. Thanks, Peter.
Thanks, Gary.
Thanks for joining us this morning.